We're going to get started in a few minutes. We just have a few more attendees to come in. We're going to start right on time, and we're going to end on time. Welcome, everybody, to the First Steps Financial webinar on guarding against financial fraud. It is the first in a series of webinars that we are providing for small business owners, bookkeepers, accountants, anybody who this information can be helpful. So let me just tell you a little bit about me. My name is Alisa McCabe. I'm the owner at First Steps Financial, and I started this company over 10 years ago. And I started it by myself as a solopreneur, and then I eventually grew to what it is today. And we have 12 employees, and we're in 3 different time zones, and our clients are across the country. And the reason why I wanted to do these webinars is because we have learned so much over the last 10 years. And I really wanted to be able to give this information for free to everybody because these are things that we learned from. Just a little housekeeping. We began on time. We're going to end on time. And if you have any questions, please put them in the Q&A and I will respond to them as I can. We are also recording this and you'll get a recording once it's done. And it'll also be available on our YouTube channel so you can review it there. So we're going to get started. I am going to share my screen. Hang on, bear with me while I do so. There we go. So today we're going to be talking about guarding your business against fraud. And you'll notice I say guarding. I don't say prevent because there is no 100% way to have your company not have fraud. There just isn't. We're talking about humans. So okay, so now financial fraud, as you know, can severely impact your businesses. As a matter of fact, there's a statistic out there that about 50% of businesses that have fraud can go out of business from that. So we're going to talk about why does fraud happen? We're going to talk about what is pink collar crime and what are the risk factors. And then we're going to talk about the systems that we use that will help deter fraud. So there are 3 parts of the fraud triangle. And this was a theory that was developed by someone named Dr. Donald Cressy. And this model focuses on research that was done for people who were caught doing embezzling. So, and it's interesting because most people that commit this type of fraud are not lifelong criminals. And for most, it's usually the first time that they've ever done anything like that. So the first thing of the 3 legs of fraud, the first leg is incentive or motivation. So and that can come in the form of financial issues. They may need to pay their bills, or it could be a situation where there's an alcohol addiction or drug addiction, or they may want to elevate their status. We have actually been in situations where we've come into a company and took over for an office manager who was stealing. And the reason why, she wanted to have the same status as the owner of the company. And so she very slowly stole a little bit of money so she could increase her status in life. The second leg is opportunity. And it's really interesting because some people don't even think of this as being fraudulent, but lying about the hours worked. That is one of them. And it is available to a lot of people, especially if you do hourly work. You can, fluff your hours. You could say that you had higher sales. You can receive a higher commission. You could put in false invoices for products or services and then keep the money. Selling proprietary information from your company to your competitors, which I thought was crazy. Um, and you could have access to the bank and credit card accounts with no oversight. That is the biggest one. And payroll is the other one. So you have the opportunity. And then the third leg is rationalization. So they are rationalizing what they're doing was right, or it was owed to them because they do all this extra work. Sometimes they also think, oh, I'm just borrowing the money and I'll pay it back. And that almost never happens. Or they could say they're being paid too low, you know, they're not getting paid enough, or they worked really long hours and they didn't feel like they were being compensated. They worked many years at the place and they just didn't feel like they were appreciated. Or it actually could be something along the lines of they're just trying to survive. So the other one is pink collar crime, which this is really interesting because this is something that someone coined this phrase, and I'm not entirely sure who, but it's all about the person who you have deep trust with, and they do incremental theft, and then they rationalize it. So it's very similar to the three legs of fraud, but the pink collar crime is often someone who is that you treat like family. Or in a case that we were aware of, they were family. And it this fraud was incredible. This person was family. It happened to be the sister of the owner. She worked in the office and she would write checks. Now, she wrote checks and the owner signed them, her brother, and they were the checks to the IRS and the checks to the state for paying their taxes. What she would then do is take the name of the state off of it and cash the checks. And so she was getting all this money. They didn't find out because she worked in the office. They didn't find out for years. She was actually getting all the notices saying that things weren't being paid, and she was keeping them. So what ended up happening was, and the IRS will do this, they showed up at the door and they said, we have no idea. They realized it was her, and in a very irrational state, she tried to burn down the building, thinking that would get rid of the trail that she had left. What she didn't know was that her father and brother had built the building and had made it flame retardant. So, but that is a situation where deep trust, and it was a family member. So we often say, don't, it should never be a matter of trust. Also, with pink collar crime, a lot of times it's incremental theft. It's these small amounts that go unnoticed. It can be a reimbursement through payroll. It can be, just these small amounts, and people don't notice them. And also, there is that rationalization. So they'll pay it back, or sometimes when people say, "Oh yes, my right hand, I treat them like family." I don't know. I wouldn't treat anybody like family. They should be treated as employees. And what ends up happening is they might say, "Well, I deserve this for putting up with all this nonsense." And that is their rationalization for it. So the next thing is that they can be in a position where there are risk factors. And so this is really comes in key when you have a situation where you have employees who have exclusive access to all the financial controls of the operation with no oversight. And again, we have seen this time and time again. We had a client that we came in and we started working for because their previous bookkeeper had been running payroll, and the owner actually wasn't checking the payroll. So what would happen is that the client, the bookkeeper was paying herself twice every week. So she was getting two paychecks. The only reason the owner found out was because the taxes that he was paying was much higher than he thought it was supposed to be. So it went on for a month and then he realized it. So, and it was because she had complete control over that. There are other situations that we have come into, and the owners thought that they were checking on things, but we came into an office where the bookkeeper had a stamp with a signature on it and would take checks and stamp them. And they never knew. The owners never knew because she did everything from start to finish. There are other times where people can do bill pay, create fake vendors, set up fake sales tax payments. There's all kinds of ways for people to do it. So there needs to be controls in in all these processes that happen. When we come in and we set up a financial operating system, we make sure that there are controls in place so that no one person has access. And also, there has to be monitoring done so that you are checking on all the transactions that go through. The other thing that happens is that there's a long-term tenure. If someone's been with you for 10 years, you're thinking, oh, they're never going to do it. And that's not, you don't know what circumstances change. We had a client, and we actually still have this client. We came in a situation that they had an employee, a long-term employee. She had hired her children, had worked for her. It was an incredible situation. They sat across the desks from each other. They shared an office. And this woman had a situation which the owner was not aware of, and she needed money. And so she started not paying bills and paying herself. She started reimbursing herself through payroll. Smart because it doesn't show up on the taxes. It was really an issue in that situation because she actually stole almost $600,000 from this woman over these years. And this is someone who she trusted. So again, this is a position-based risk factor. Is someone who's been there a long time. There's never a situation, it doesn't matter how long they've been there. Things can happen, things can change in that person's life and you don't know it. So some of the things you want to watch out for. So suddenly, the employee has this lifestyle that you are unaware of. So be observant, watch your people. And then if there's documentation issues, are there missing receipts? And then they kind of blow it off like, oh, yeah, I forgot that, or I lost it, or, if there's something that just isn't adding up. And any new employee who doesn't want you looking at something should raise a red flag. So any possessive behavior. So we were in a situation where we were working with a potential client and she was replacing her office manager. She was emailing us from her personal email because she didn't want the office manager to know that there was a conversation with us going on. She didn't want to raise any issues and just, she didn't know. She was just exploring. So we were communicating back and forth. We actually gave a proposal. And she reached out to me within a few days and was furious with me because her office manager came to her and said, I heard that there is a company you're looking at, and someone told me about it. Someone who works there had told him about all these things. Well, of course, we were so distraught. First of all, we felt someone on the team had betrayed us. Like, who would do this? Any one of those things. As you can imagine, the potential client was extremely upset. So we investigated it and we did we researched him, tried to figure out who the connection was, what was it. We finally came to the conclusion it was not us. It was not anyone on the team. And we told her that, and the potential client didn't believe us. So it really tarnished our reputation. It made us out like maybe we had done something. Um, Come to find out, the office manager actually had access to her personal email, and that's how he knew we were talking to her and talking about being replaced. Um, he actually was using their credit card to buy alcohol and go out to dinner and buy all kinds of things for his personal life. And so when they finally did catch him, he uh, had some issues and he was fired immediately, as you might imagine. So if someone ever does this possessive behavior, please know it's a huge red flag. Um, New vendors. If there are new vendors, please get the information. This is one of those things that happens as a warning sign. You're like, huh, I don't know that person. We inside of our company have a rule. If there is a new person, a new vendor that comes up, that it has to be checked on. So how can you implement preventive controls? So there are things you can do. First of all, you have to develop a culture where you are verifying, where I don't want to say you're untrustworthy because you would never want a culture that is untrustworthy. But what you can do is verify everything that happens and make it a standard practice. You can also have duty segregation, multiple people involved in the financial process. And then there's always regular auditing. So you want to make sure that the person who is in charge of anything financial goes on vacation, that someone goes in and takes over and does the process. It's a great opportunity to check the processes and make sure they all work. And then make sure that there's a strong foundation. Make sure you have clear policies and have documented procedures. So there is some monitoring that you can do for the work that people are doing and keeping an eye on things. So you could do random transaction sampling, which means, and this is something that when we have a CPA on our team, and when she worked for one of the big four, she would go in and she said every time they did an audit, she would just randomly pick a transaction, and it was always the one that was a problem. So it's interesting that your eye just goes to something that's not right. So do random sampling, check on things, do vendor verification. Again, we have a process in place that we check on the legitimacy of all the vendors that come in. Also, require that people take mandatory vacations. In some banks, it is policy that they have to take 2 weeks off in a row, which makes sense. This is where things come up. When someone is away for 2 weeks, you go through a cycle, and you will get an email from somebody who you maybe were unexpected. You're going to see things happen that you were not expecting. It also is a great time to go through your processes and make sure they actually work. And then do a professional review. You can always engage external accountants for periodic reviews. We do it. We go in, we can be that third party to look over somebody's books, make sure things are going well. We're in the process right now of documenting processes for a company. And we haven't gotten into it yet, but the bookkeeper is really protective of the books. So again, we're looking for some red flags. So you may wonder, why don't some victims report? So you're a business owner and someone has stolen from you and you don't report it. Well, first of all, it's embarrassing. You are a business owner. You are supposed to be smart, you know what you're doing, and you feel super embarrassed that you have allowed this person to take advantage of you. Also, there's a fear that others are going to blame you. So even as a manager, so a manager may not report it because that's their job. They were actually supposed to be taking care of the person under them, keeping an eye on the work that they do. And they weren't. And they feel like maybe it would reflect badly on them. And that there would be issues with their job. So they may cover it up. And then it could be personal. You might have emotional ties to the person, and you may be reluctant to pursue charges. You also worry about your reputation. So, what damages would incur if you actually made this fraud public? Does it make the business look bad? And you can see why many people would avoid doing any of these. I do have to say, we have a client that pursued the fraud that happened in her company, and she is a rock star. She went after everyone who saw her books, everyone. The office manager who had stolen all the money, little bits over time. She went after her. She was actually able to recover quite a bit. She actually went after the accounting firm who reviewed her books every year, gave her a report every year that said, this is how you're doing. This is how you did last year. And they were trying to provide value to her. Totally get it. It's a great idea. But you actually should be reviewing the books in a way that you're verifying the information. So when she went to court for all these things, she got money from her insurance company. She got money from the person who actually did the crime, and she got money from the accounting firm's insurance company because it was found that they were partially responsible also. So it is a big deal to go after it, and there is a huge risk on the victim side. But the more people that come forward and say that this happened to me, maybe the less it will happen. And maybe the more that we put these triggers in place, we can hopefully reduce the amount of times that it does happen. So these are the systems that we use internally. Every single client that we work for, we have documented processes, and then it's used by other people on the team. One process that we have that, and there is a never breaking this rule process, is that no one on our team has access to a bank account that you can do bill pay or move money. We have what you call view only access to our clients' bank accounts. And as a business owner, no one in your company should have access to move money. There are ways to have people be able to be in your bank account or be able to pay bills that they do not have to have full access to your bank account. And then there's other documented processes that really should be in place. Um, there are, if you have a job description, that should be part of your documents. It should be documented what that person's job description is, and then it helps everybody understand who should be doing what. There are, so if everybody knows what they should be doing, then it will be extremely helpful, and other people will know who's not supposed to be in that account. Um, Also, mandatory vacations and complete removal from the system. You should also have insurance. Background checks. We do background checks on everyone that we hire. It should be a standard procedure for everyone. And then keep vigilant. Take notice and train everyone at the company to do the same. We use LastPass for passwords, so no one has access to the passwords. That has been phenomenal for helping us do that. Practice Protect is another added layer that we have so that if anybody has access, we can remove them instantly from every account, not just one, not just a few, instantly removed from every account that we have. Bill or bill.com, for accounts payable, it has an approval system. There are other bill pay systems out there, but be sure that it has an approval payment system. And a lot of the really good approval systems have a tiered support where they have um, approval systems where if it's up to $5,000, it requires one signature. If it's over five, if it's 5 to 10, it requires two signatures. So there is a way to set up a system where it can make it easier for other people to approve it, but make it harder for other people to commit any fraud. Payroll. Payroll should be checked and it should be run on an approval system. We run a lot of payroll for our clients and we are always checking reimbursements. There should be a receipt for a reimbursement. When there's a payroll run, we need to have documented proof that that person worked those hours. And we need someone inside the company, a manager of that person, to approve that payroll. And if you're a business owner, payroll is one of the easiest ways to commit fraud. So if you have someone inside your company running payroll and that payroll pays them, so you're paying yourself, that's not good. You need to have someone who's not on payroll running payroll. Credit card purchases. There should be processes around credit card purchases. What is what is appropriate, and what kind of documentation you should have. We use Ramp, and Ramp is phenomenal. It connects with QBO. Ramp actually is its own system, and you can set up categories so people, you can say they can only use this credit card, virtual or a physical card, for certain things. Whether you're saying like, hey, they can use this for food, they can use this for travel. They can use it for certain things. We have a conference coming up, and everyone on our team is going. So we have given everybody a card. It's only available for travel and for food. So we've made the system. Someone can't go out and buy a car with it. They can't go and, do other things with it. And there's also a limit on it. And someone on our team as a manager has to approve that payment. So there's different things you can do. And Divvy is also set up similarly. We also have a process that a W-9 is needed for every new vendor. And there has to be a verification from someone outside the person who gave us the information. So we work with companies that have a team of salespeople. And they may say, hey, I'm working with this new person, a new vendor. Here's the W-9. We go to the sales manager and say, like, hey, we hear you're working with a new vendor. Can you approve this? And that way, it all stays within an approval system. And there's more than one person that knows about it. And the reason why I keep mentioning more than one person and segregation of duties and having several people, because fraud is most commonly occurs with one person. It is much harder for two people to collaborate and do fraud because one person isn't in it all the way. And I'll tell you a little story about one of my children that committed fraud in third grade. There was a situation that the teacher had these little award things and she had copies of them in her desk. And every time you did something good, you could get one of these little things and she wrote their name on it and put it in the can. And at the end of the week, she picked a name from the can and they got a big bag of candy. So my child thought, I want that big thing of candy. She said to her seatmate, hey, can we let's write our names on all these, because the teacher's out of the room. We'll take them, we'll write our name on them. So they wrote their names on them. They put them in the can. They were like, woo, we're going to win. And one of us wins, we'll split it. Yeah. Well, the other girl had a moment of consciousness and said, I can't do this, and told the teacher. And so my daughter got called in. Of course, I got called in too, but that's why it's very hard to do it with two people. That's why we say segregation of duties. Someone will have a moment of uh, realizing that this is not the right thing. So that's why we say don't leave it up to one person, have two people on it. And also, the big thing that you can do is create a transparent culture. Everything that I've talked about here is really getting down to having a standard where you tell everybody on the team, you talk to them about fraud, have these conversations with everyone on your team, and make sure that there are processes in place. Your handbook should spell out specifically all the processes that happen for reimbursements, for using credit cards. And then people will know if something is not happening. And it won't be just you as the owner looking over it. It should be. Everyone in your company should know the process that goes along with doing, sending in a reimbursement, running payroll, doing any transaction that happens in the company, and everybody is very clear about what should happen and how it should happen. And then companies with strong reporting systems, they see a 78% fraud reduction. That's insane. That is where you are able to really work with your team and really step back your worry on them. And who wants to focus on worrying if your team is doing things? If you set up this culture, there's going to be a lot less worry. There's also a better detection rate. So fraud is discovered through employee tips in businesses that have reporting channels. So in our company, we have a decision matrix and we empower our team to make decisions. And we tell them when to go to somebody else, when to do this. This is one of those things that if you see something, say something. This isn't something you should handle on your own. This isn't something, if you see something that doesn't look right, you immediately go to a manager and you say, like, hey, I don't want to talk bad about this person, but I saw this. You might want to look into it. And that allows the manager to look into it. And we reward that type of behavior because it's really important to be honest and have integrity. And then how much faster fraud is discovered is when you have anonymous reporting options. So, this all goes back to how can you have your people say something without anyone knowing it? And how can they maybe mask their identity? And there should be a way that they can let you know that this happened. It's really tough in small companies to have that anonymity. And it would be something of a system to work out so that somebody could report it and be anonymous. Um, if I can leave you with one thing, encourage a speak up environment with your team, anyone that you're working with. Implement anonymous reporting channels. Ensure that there will be no retaliation for raising concerns. So I know in the colleges now, they actually have situations where you can, um, if you're in a situation and you're with somebody who has drank too much alcohol, you can call the police. You can take them to the hospital. You can report it to the university. You can do all those things. And even if you were drinking, you will not get in trouble. And you need to have that same type of policy in your company so people can come to you. And even if they've done something wrong, that they can have some sort of amnesty so that they will not get in trouble, but that the situation stops. In our company, we have something called marketplace chaplains. And if you're familiar with the military at all, a chaplain is just someone outside of work who you can talk to. It's not religious unless you want it to be. But everyone in our company can go talk to the chaplains and they can say whatever they want to them. And it's up to them whether the chaplain helps them discuss the situation with us or if the chaplain themselves can come to us. So it's really, it does provide a level of anonymity if they want it, but it also allows them to come clean. And we would provide amnesty in that situation because it's more important that they have integrity and that they have come forward and done that. So I do have a question. This is this is so good. Thank you so much, Jody, for sharing this one. We get an email from an employee asking to change the direct deposit information. What steps do you follow to ensure this is really them? This has been a situation that has happened so many times, and with AI and the advances that have been made in fraud, it's crazy. And this is an outside player. This isn't even an internal person in your firm. This is an outside player who's hacked your email. What we do is we call We will send an email first to the manager outside of that. So we don't respond to that email. We send a separate email to a manager, and then we make a phone call, and we make sure that this happened. So sadly enough, I can tell you that this exact situation has happened. I have a colleague who, in her own firm, was talking with an employee back and forth. They were discussing a client. In the middle of the conversation, an email came through and said, "Hey, oh, just don't forget, I'm changing my banking information." And because she was in the middle of having an email conversation with her, she didn't think anything of it. She changed the email, she changed the banking information, and payroll was run. And the employee called her and said, "Where's my paycheck?" And she said, "Oh, I made the change for you as you asked." And they said, "I didn't get it, and I didn't ask you to change it." So it was a lesson learned, pretty upsetting to say the least. Um, that happens, and it's really tough. That is an outside fraud, and it is very distressing when that happens. Um, but you have to have measures in place that you can prevent that. Um, I have another question here. Um, I have another question here about payroll, and they want to know, how do you approve payroll? So if you approve payroll, if you are in charge of approving payroll, you should actually be logging into your payroll provider and pulling up reports to make sure you do a comparison of this pay period versus the last pay period and see if there's any changes. If there are any changes and you're not aware that they should be happening, that's when you reach out and find out why those things are happening. If there's a reimbursement, if there's a raise, or someone was on vacation and you are not aware of it, there are things that you would want to do some secondary information and find out from someone else why this is showing up in the payroll. But that's the easiest way to check on a payroll and approve it. I have another question about how to check on a vendor. So, how do you know that a vendor is legit? If you're the manager and you people come to you and say like, "Hey, this, you know, Susie on the sales team came to us and said like, we have a new vendor. How do you know?" So you can Google them. That's one way of doing it. And then make sure that it's a real address, that it actually exists, that there's a phone number, that there's a location. And if you are really concerned, if there is something that is a red flags never disappoint. If something seems off, it is. Check it out. Make a phone call. It can never hurt to make that phone call and ask and say, like, "Hey, just wanted to make sure I have some information that you guys are a new vendor for us. I just want to make sure I'm following up on it." Also, we've had situations where, and again, this was external fraud, where someone came in and said, "Oh, we need to change our banking information," a vendor saying an email saying we need to change the banking information, and it was not the vendor. So again, any changes that come in that happen, reach out to the person, the vendor, the employee, and don't email them. Phone call. Make a phone call and ask them that they made this change. And you can always do things to make sure that that is legitimate. Ask them questions that only they would know. What was the amount of the last bill? That person may not know it. What is your payroll supposed to be? Things like that. So you definitely want to make sure that you follow up on those things and check on anything that has your little antenna going up saying, this doesn't sound right. So I hope everybody enjoyed this. And I hope you enjoyed our fraud stories, because I could just sit here and eat popcorn all day listening to these things. Um, and I hope you sign up for the rest of our series. We will be sending out emails so you can sign up for the other 4 webinars that we have. The next one happens in June, and then we have one in September, October, and November. And the next one is about happy team, happy clients. So I look forward to seeing everyone at the next one, and thank you so much for being here. Take care, everybody.